Traders, welcome back to another price action trading lesson. We're going to talk about price action rules. We're looking at S&P 500 and futures. But price action rules work in every market. They're universal. So right now when I'm working with the structure using pure candlesticks, I can see that I have bearish spike down and I have series of low highs and low lows. In fact, you can see nice market geometry. So as a price action trader, I always look for some channel. There's always a channel present for every single price movement. So this is right now getting my attention. Okay, I'm following this short-term price move because this is the most recent bias in the market. The overall structure is quite sideways, so I'm going to be following the most recent structure as of right now. We have what looks like oversold area, potential overshoot that can generate stronger pullback, but because we created additional new low instead of reversing after overshoot, I can widen the channel because it's not acting as overshoot after the initial break. Okay. So now we have the bearish trend down, so I'm only thinking about selling at the key entry point. Market is correcting. I'm going to redraw my short-term uptrend working higher because there's always a correction present even inside of this trading market. I have a new low, first attempt to sell, pull back, second attempt to sell. There's going to be break below this bar. I cannot sell second entry short. Number one, it's an inside bar, so this is automatic skip. Number two, we broke above EMA. This is not good. You want to see EMA rejecting. And number three, I have short-term uptrend in play. But main issue is the inside bar. So I'm just waiting for potential lower high. Can I get some lower high or double trap? No, inside bar again. Congestion. So once I see EMA exactly in the middle of these bars and these bars stack right next to each other, this is no trade zone, area of indecision in the market. And when I'm watching a structure like this, I need to see either failed breakout to the top because most breakouts fail, or preferably kind of like a breakout pullback pattern because most breakouts will fail at least temporarily. So breakout, taking the pullback, retest of the key level because I expect new low for the downtrend. Okay, this is why I'm looking for the channel because this will give me an idea where the market is heading. The bias right now is bearish, so can I get a lower high breakout pullback? No lower high breakout pullback and downtrend played out. Okay, never mind. So now I'm going to pause looking to go short because this downtrend played out. So this is how I'm using price action rules. Let's see what's going to happen. Instant break above 21 bar exponential moving average is telling me, okay, bulls are back in the market and I have some decisive push up. So I'm going to redraw a brand new uptrend working higher, something like this. And now I'm thinking bullish, okay? This is not trending market by any means. This is just consolidation where trends are quickly pivoting. So I just try to follow most recent structure. I don't see no good significant key level that I have to be worried about. So I'm just going to focus on this uptrend. Small break new high. Okay, uptrend played out with small break new extreme again. So I'm going to mark it. I cannot sell, definitely cannot sell above EMA. Just lower high, and I cannot even sell for second entry long because it is still above EMA. In fact, I'm asking myself, hold on, why the EMA keeps holding after breaking new high? So it looks like there is some potential consolidation like this. Okay, the downtrend break new extreme, and we have massive bullish spike above the EMA. Okay, this is technically double trap, new high, first entry long, second entry long, push lower, and a double trap that stopped all the early bulls and is going to stop the first second entry long. Now, you can see we formed a small consolidation. Downtrend clearly played out with the break, push to new extreme. Looks like visual 2 legs down. You know, even though you have a small break in new high, it's quite tiny. This is very tempting setup. More locally based setup because you have a break in a new high, but the break is not significant. Can I drill a little bit wider? I actually can, and it's not even that big of a stretch, so you can consider. But mainly you can see the support is holding. Those 2 legs are so broad, there is no reversal. And such a big bullish bar closing so far up, more advanced trader can consider taking this double trap, a little bit more advanced. If you have clear uptrend in play without new high, this is definitely a good setup. Okay, we're working higher. Working higher. Okay, at this point, price action is trending higher. So what I'm going to do is I'm going to measure the first leg, copy it because I'm using the market geometry, I'm using the measured move. I also like drawing a wider channel just in case because it looks quite structured. Even though I have no third swing confirmation, why after breaking new high, we just keep working higher, keep working higher. So I like thinking about additional channel. But we have only, actually we have a second entry long, new high, first entry long, second entry long, but I cannot take it of course because I have downtrend in play. It's not even at the EMA, so I gotta be careful. Okay, market is correcting. Break new extreme, downtrend played out. Now it's confirming our potential channel. Now, we are around the measured move. Every single time I have 2 swing confirmation without third swing confirmation, I want price action exceeding the measured move, okay? Because it will tell me that the momentum is still bullish. If you are exactly around the measured move, I'm being more careful. I'm not being as aggressive. So even though we can use visual second entry on a double bar entry, the initial signal bar is bad. We can't really go long here. It ended up working, but it's not the best setup here. Breaking new high. Uptrend played out, breaking new high. You can see you're still around the measured move area. This is where a lot of traders can be taking profits. So this is why we're not rushing into going long here. Downtrend, break, new extreme. And now we have a breaking new high, even for the secondary wider channel. And market is quickly reversing down. So at this point, okay, I'm once again going to follow the new trend. We are pivoting. So I'm thinking about second entry short at the EMA. Okay, so I follow simple trend line rule and I follow the hyperbolic setup at the key entry point. Downtrend is new low. New low, first entry short. Push above EMA. Okay, and this is now confusing. Why are we back above the EMA? What's happening? Why is this downtrend not getting new low? So this is already first sign of confusion. Did I draw the uptrend correctly? Is it a little bit wider? Let's see what's going to happen. No, we're back below EMA. Okay, so there's probably no wider channel. Just getting a little bit wedged. And for this reason, I walk you through the thought process. I skip this failed second entry long. This failed second entry long is not a bad setup to consider. It's actually quite tempting because you do expect new low for this leg down, but it's just quite worried why we broke above EMA here. You know, we retraced almost the entirety of this downtrend. You can see it's almost retraced. So to me, it looks quite wedged, a little bit neutral. It's not as bearish. This bullish push was too strong. And also, if I'm going to take a look at 10,000 tick chart, we are still above EMA on 10K chart in order for me to sell. But I am going to market a little bit more aggressive. If you took a chance, trading is about taking a chance. Not a horrible setup, but hopefully it is clear why it's not the best setup. It's a little bit unclear what's happening here given this massive retracement. So I was personally looking for second entry short, which came here, but the signal bar is bullish and the secondary bar is just way too big, way too late. Even though it worked, there's simply no way to enter following the rules, only if you have some better bar. But on my chart, I cannot take the second entry short. And also what I can do, I can measure one leg down, break second leg down, perfect measure move to the tick. And now you have a nice bullish bar, you have some support, you're far from the EMA. You know, this is a decent long here, more advanced trader can consider. Nice bullish bar, just ride it back to the EMA after measured move depletion. Once again, more advanced trade. If you're a novice trader, you may want to skip, but two legs down. Looks like broad two leg pullback too. Some support maybe forming. So more advanced trader can consider riding back to the EMA. Okay. At this point, I was thinking we may have some trading range. We may go higher, but market continued to go lower like this. Okay. So this was once again a little bit confusing. Why the market keeps working lower? So I'm trying to explain this. I'm trying to look for some wider downtrend like this. Why after breaking new low of this initial leg, we keep working lower and we keep working lower? So I was looking for something like this, and also what I was looking for using the measure move here and something like this. But you can definitely tell this is trading range structure. Okay, spike up, spike down, spike up, spike down. So not really super clear. This channel is too broad for this trading range structure. But at the same time, I have to explain why market keeps going lower, even after new low of the initial leg. So these are my two main worries now. It's too wide for trading range. This is clearly a trading range. And we have some support around this level. At the same time, you know, we are working lower, so many low highs and low lows. So I'm just going to be open-minded and see what market does. A lot of what we do is we're just following. Sometimes traders think they have to know everything. You don't have to know what's going to happen in every single candle. That's not the whole point. That's not how we are going to acquire the edge. We acquire the edge if we follow the market makers, the institutions, and they're going to basically tell us exactly what their intentions are by following the rules and following their footprints. Okay, so there is no ego in this business. We are not patting ourselves on the back if we predict it correctly. We're just trying to follow price action. We still have some overshoot. Okay, massive spike up, something like this. Strong spike up, making me doubt this wider downtrend. You can just also draw some tighter alternative with the break in extreme. You cannot take a lower high, which is second entry short. Why? Well, because this spike is significant, there is no new extreme, and after potential overshoot, even if you don't have overshoot, this is not enough, okay? Because this spike up doesn't have new high and it's too strong. But definitely, if you have overshoot, and we talked about it, the wider channel is, you know, iffy, even that. So we have to be careful. Definitely need something stronger. Okay, market keeps going higher. No break here. Okay, nothing much happening here. Market is reversing down. I'm gonna leave the wider channel. It just doesn't fit that well, but I wanted to walk you through the thought process. Okay, we have one leg up here, pull back second leg up here. So you can see it looks quite rangy. A lot of two-legged moves. So right now uptrend played out with the break and a new high. So even if there's overshoot that reverse the market or just tighter channels, you get to the same point. And now the market is trending down. We're far from the EMA for failed second entry long right here, but it's too far from the EMA. I cannot sell. But I like drawing a brand new trend. Once again, we are in a trend range. Market is pivoting quickly. So I'm just going to quickly adapt. I'm not going to argue with the market. Okay, we keep working lower. It looks like there's a wider channel. Actually, I drew it a little bit tighter. I'm going to draw a wider channel like this. I really have a lot of confirmations. I'm really going to make price action fit well. I have a overshoot here. Okay, can we reverse the market? The market keeps working lower and keeps working lower even after initial overshoot. So once again, just like it happened earlier today, it's not acting as overshoot after initial one. It looks like the channel is wider. If you're not sure, you're going to skip the very first second entry short at the EMA anyway. But since it's not acting as overshoot after the first one, additional push down, it looks like the channel is just wider. Two-tier channel like this. Okay, you have a second entry short. I have to skip regardless because the uptrend is still in play. Okay, inside bar anyway. And now I have double trap. Okay, once again, why is this double trap? Because a lot of sellers, early sellers who are selling the second entry short inside bar, inside of this trend, they're going to get trapped. They're going to get trapped. So they're just going to stop them out quickly. They're going to stop early bulls as well. And now you have basically a third entry short that is higher than the first and second entry, and it's closing below EMA, basically double trap. A little bit more advanced setup, but it's right at the key entry point, right below EMA, uptrend played with the break a new high. This is a great high probability setup. Double trap setup right here. Can I get a lower high confirmation setup? I have a lower high. This would be great textbook high probability setup, but the signal bar is lackluster. If you have better bar on your chart, you have to sell a lower high. Key entry points are holding. You can see nice market geometry telling you exactly where you're supposed to be selling. But on my chart, I cannot simply mark it. You cannot cherry pick. The signal bar is horrendous. Context matters the most. So if you have some tail at the bottom, that's not such a big of a deal. But you know, this signal bar is really trash. So I just cannot mark it after the fact, no matter how much we want it. You just need slightly better bar, unfortunately. But great area. You can see we're using the market geometry here and here and here, predict exactly where to sell. So this is why price action is so powerful. It can tell us and navigate us exactly how we want. Break a new high, so I cannot sell right now above EMA. Okay, there's some wider correction. Okay, and now I don't see nothing much. We're getting below, but we're back above. Okay, confusion now. Because if you're about to test the new low, you want to see something below EMA. We're back above. So I'm just being super patient here, super patient. It's starting to resemble some broad two legs again. So again, market likes to move like this. Now, every single time you're struggling to find a good channel, and this is, you know, structure that is too broad, too much empty room, just doesn't look healthy, it's most likely some variation of a two-legged pullback. And market is reversing down, which is now giving me confidence that I do expect new low for this downtrend. So I want to see second entry short at the EMA. Can I get a second entry short at the EMA? No. Okay, still chance for second entry short at the EMA. Have all this setup. I can still widen a little bit without distorting the price action. It still looks like a one push working lower. So still, I expect new low even for this channel. Two channels need new low. I'm going to redraw the uptrend. Okay, new low, first entry short, pullback, second entry short, but it's an inside bar. Congestion, I just can't pull the trigger here. Can I get a lower high breakout pullback? Yes, but it's so far from the EMA, I can't take it. I have to see pull back to the EMA. This is important because we can correct higher. We need to go back and test this breakout area. So we're not at the EMA, we're not even at the breakout area. So I can't really take it willy-nilly like this. I was hoping for some failed second entry long. Now we're back above EMA. You know, now it's super choppy. In hindsight, we have actually failed second entry long here. First entry long, second entry long failure. But I just don't like the stacked area. Price action wise, it makes sense. Because downtrends, they need new low, new high, first entry long, second entry long failure. maybe, but when I see congestion like this, I'm staying out of this, especially this late in the day. And now the market is about to close, a lot of profit taking. This is the overall structure for today. We ended up having consolidating market to start the day with, and then we reversed to the downside and had some nice downtrend. This was really easy to identify, such a nice market geometry. Nice high probability setup right here where the correction phase is ending, generating significant push down. It's a shame this lower high was a bad signal bars within trade of the day. 2 legs up, and the market pretty much consolidated. You can see how there are a lot of 2-legged pullbacks, big ones, because when the structure is sideways, trends tend to pivot quickly. So this is something to keep an eye on. But I'm gonna wrap it up. I hope you had a good trading day. I'm gonna talk to you next time. Good luck your trading.